All right, here we are. Chapter 11, current liabilities is this chapter. So we're going to just review some vocab and then we'll go through a little quick practice. So it should be less than 4-minute video for this one. So as a reminder, liabilities, those are debts that are owed to the creditors. And there's three main characteristics for liabilities. They occur as a result of a past transaction or event, and they create a present obligation for future payment of cash or services. So remember, it could just not be that the business owes some cash. They could owe services maybe to the customers. So maybe the customers paid them in advance and they didn't provide the goods or services yet. And so that becomes an unearned revenue, which is a liability. And that is one that could be completed as a liability, as an obligation by providing the service or the product. Okay, and then the third one is their unavoidable obligation. And for this chapter, we're going to practice with current liabilities, but we'll go over what current versus long-term are. So current liabilities, they are paid either with cash or goods or services within 1 year or the entity's operating cycle. And so I know you're like, oh, the operating cycle is 12 months. Sometimes, depending on that type of industry, maybe it's a contract type of thing. And so that operating cycle maybe is 13 months. And so you might see that in practice. And so don't be tripped up on that, because the operating cycle could be more or less than the 12 months. So that's one extra thing there. And then the long-term liabilities, they do not need to be paid within 1 year or within the entity's operating cycle. So it'll be more than 1 year. And so we're going to go through that, just practicing identifying whether it's current or long-term. And so let's go ahead and get right into some problems. I'm going to move the camera over so I don't disappear completely. All right, so we have accounts payable as our, well, first let me go over, sorry about that. Let's go over, we're going to identify if it's current or long-term. I don't know what's happening there. Cancel. I did not. That's the problem with being left-handed. I end up clicking buttons that I shouldn't be clicking. All right, so we have current liability for CL, and then we have long-term liability for LTL. All right, so first we have accounts payable. So that's when the business owes cash to the vendors. And so that's within that current operating cycle. And so it would be current liability. So we'll make it BCL. Note payable, we can see here that is within 3 years. And so that's over the 1 year or the operating cycle. So it'll be LTL, long-term liability. And salaries payable, like we're going to pay those salaries. It doesn't identify that it's going to be paid past a year or anything like that. So we're going to assume that's within the current operating cycle. And so that would be current liability. And then this one was nice. They told us note payable due in 6 months, so less than the year. So it'll be current liability as well. Sales tax payable, that's going to be owed on sales that we've made within the current operating cycle. So we'll make it current liability. This was nice again, unearned revenue. I went over that in the intro as an example, and you can see they identified saying 8 months. If they don't say, assume it's current liability. If they don't say within 8 months, and if they say due in more than 1 year, then yes, we'll make it long-term. So we know it's current liability, and they were nice because they wrote 8 months. And then income tax payable, that would be for our current operating, that would be taxes owed during our current operating cycle. So that would be current liability as well. So that is it for this video, 4 minutes. Pretty short video of reviewing current and long-term.